All right, welcome back to another edition of Forest Tech Magazine. It is your host, Lewis. Today is February the 18th, 2019. Oh my goodness. How did we get this far this fast? I don't know. But we're here, right? Hope you enjoyed your weekend. And hopefully, if you haven't made any money so far this year, stick around with us. We can give you some tips and tidbits that will help you turn that around. And if you have been making money this year, congratulations. And hopefully, we can help you add to that profit margin. Now, before we get into all that, let's get into this disclaimer here, and it goes a little something like this. Any and all information shared with you by Forest Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that is shared with you by Forest Tech Magazine should be considered to be investment advice. If you're looking for investment advice, then our suggestion to you would be to seek out the assistance of a licensed, competent advisor. And I want to welcome all of our new followers to the channel. Thank you guys so much for believing in us enough that you'd want to click on that subscribe or that follow button and want to continue to get updated information from us and be alerted every time we go on the air, because you understand and you believe that the information that we give you is top notch, and it is. So once again, thank you guys for tuning in and watching us and supporting the channel. Really do appreciate it. So let's go ahead and get on into this today. Let's look at some trades, man. Let's get into what you came here for. Now, if you notice, I have some um, technical indicators on down here at the bottom of the screen. I have my RSI and my MACD indicator. I love the RSI and I love the MACD indicator. And the reason why I love these two indicators is because I use those to help me measure momentum in the market, just to kind of see, are there buyers coming in or sellers coming into the market. And it's just another visual representation to kind of help me interpret the information that I'm seeing in front of me. But all in all, I do not trade just with these indicators alone. Like I said, I trade with the Fibonacci's. These right here are kind of a, what do you call those? Um, Not confidence, but no coincidence. Oh, confirmation. Yeah, I use it as a confirmation tool for what I'm already seeing in the market based off of the price action. And so, primarily, I'm going to use my support and resistance lines and my Fibonacci's and my trend lines to gauge what price is doing, where is it at, and what direction it's moving. But I will come in maybe after I'm in the trade and look at some of these two indicators here, just kind of to better gauge or to get confirmation about the price action for the trades. But at any rate, I'm going to take these out right now because, like I said, I don't really use them to trade. It's more of a confirmation thing. It's more of kind of like an afterthought. Just want to look at what price is doing. I know some people use them along with Fibonacci's. I just don't. Now let's look at, if we could here, please. Um, there we go. Oh, look at this. Great Britain pound is $1 zillion. And as you can see, price went below the A. Boom. So when price goes below the A, that means that this previous move is no longer relevant. And now we should be looking at new move in the market. So the new move in the market should be either to the downside or perhaps to the upside. Let's see something here. So now the question becomes, where's price going? Looks like price definitely is moving to the side, right? But the question is, what is price actually moving down? Let's take it to an hour daily chart to see what the overall price movement is. And if you look here, so Sorry, guys, a little thirsty. It's like price is moving, or was moving anyway, down. Then it's coming back up, testing this support level that turned into resistance. Push through that support level. Let's take this off here for a second. Get rid of that. Right, well. So yeah, it was like price was pushing down through support, came back up, retested it, pushed back down, came back up, went through it for a little bit, and then came back down again, and then when we retested it, and come back down again. So this support actually turned into resistance for this particular pair. You can see where it was support before in the past, right? You can also see where it's kind of resistance for it before in the past too as well. Unfortunately, it became resistance here, while this currency pair was kind of moving sideways for the moment, right? So the question is now, what to do next, right? Do you go back in this thing and sell? Do you go back in this thing and buy? Well, what do you do? What's the key here? And I got to tell you that the what next would be probably do nothing with this particular pair. I mean, you got no obligation to have to come in and make a trade on anything. And kind of like what we did the other day, if you guys remember the other week, when we came in, we did $3,000, right? With demo money, but we did $3,000, right? Basically trading other pairs, and excuse me, that was good. Trade other pairs, and the reason why is because there was nothing to trade in the Great Britain pound pairs, not in the direction that it was initially going anyway. Right now, it's like it's a bit of a pullback, and I think it's a bit of a extreme pullback, just my opinion. But if we look here, and we do believe that we're going to still continue to pull back some more. Looking at these fibs, I go 1, 2 on the third fib right now, and it looks like the D extension on this one would be here at the 1.86217. And as you can see, price got close to it on Friday, and more than likely it'll probably be tested again today over the next 24. I mean, that could be a target for you. Me personally, I just don't think there's anything out here that's worth getting into. I think there's better setups out there in the market, and I think that the best thing to do would be to find those better setups. I mean, there's 166 pips. $300 plus to get back to the A. $200 plus to get past your initial or your C retracement. So I don't know. I think looking at the risk reward ratio, just looking at the position that it's in, I think for me, this right here would not be a good trade. So it's not something I would want to trade. I mean, I know there's probably some folks out there that would trade it. Not something I would be looking at trading personally. Probably would stay out of this right here for right now, even though it looks like it could be potentially easy money. Could definitely be a trap. So I'd probably look for something a little bit easier to trade, and not that particular pair. This right here is a Great Britain pound, Canadian dollar. This right here is actually, let's look at this for a second. All right, so here goes your A, B, movement. Here goes your C extension, and originally, and of course, you're seeing it's come down over here over time, right? Price moved up and then began to come back down, doing this downward trend. Now, interestingly enough, right, price has been making some moves, right? Price Here goes support resistance over here, right? See, it's acted as support before in the past. Price came down, bounced right off of that. Price came through it, bounced up, came back down, bounced up. All right. This is an interesting, very interesting point. And then not only that, we're coming up on the overall downward trend line for this particular pair. So essentially what we're doing is we're looking to see what's going to happen. Is price going to bounce from this support resistance and push over this downward trend line? And if that's the case, then where will price go to next, right? Essentially, we're looking for price to hit the what? The D extension up here, right? Because price is traded back into that area, right? It hasn't hit down into this bluish lavender color here. Price has just been from this red, and that's it, right? So it should be going back to the red, right? So that's a long ways for price to go. That's about how many pips? Where is that now? It's 476. About 422 is probably what's going to wind up being. From the C, it's 96, 98 pips. And from the A, it's 225 pips. So, would that be a good risk to reward ratio? Absolutely, right? Because if you're risking it going from the A to where we at, from the A to, well, hold on, so let's go up a little bit more. Right here. It's probably going to be 281 pips altogether from entry to the A. And if you're looking at from the C extension, it's probably going to be 144 pips. But when you look at what your D extension is going to allow for, is 400 and some odd pips. So definitely from a risk reward standpoint, that's going to be a good trade, right? And then the other standpoint, what you do is make sure that when you do trade that you put on a risk-free trade. So as soon as possible, as soon as you get into the profitability with this right here, what you're going to want to do is make sure you put on that risk-free trade, so that way ensuring that you do not take a loss on that trade, and that no matter what happens, that you're going to make something off that trade. This right here could be potentially a good setup. This is something that we definitely want to watch for the next, excuse me, 24 to 48. Because as we get closer to that profitability, as we get closer to that buy zone, we want to be looking to get a nice strong candlestick that says buy, and then we want to get into that particular trade. So this one here, definitely going to keep our eye on. Possibly something that we're going to be trading later on today. This one is the Great Britain Pound, Japanese Yen. Let's look at this one here. It's still in the sell zone. It's not in the buy zone just yet. So you can see, there's your downward trend line here. Here's our fibs, right? AB movement. We're looking for that C retracement, which we believe is here. But right now, price is still going in a downward trending motion, waiting for price to cross over that downward trend line. That lets us know, or gives us the signal to go ahead and start buying, because then we get momentum in the market along with us. It's close approaching that trend line. And so let's see if we're about to get some momentum here in the Great Britain Pound. Looks like there may be some possibility here that we're getting some pickup in this, and we're going to see. So this right here may be another one too. Let's look at the, actually now, from a risk reward standpoint, this right here is not going to be as sweet as the one we just looked at. Yeah, definitely not going to be as good as the one we just looked at. Unless, of course, you're just going, you're not going to be putting your stop loss back at your A. Stop loss is going to be here at your C extension. And then from there, you're going to go into the trade. And then also, too, like I said before, as long as you're putting in a risk-free trade and you're buying with momentum, then, when we look at, putting in whether the A or the C, it doesn't really matter, because essentially what we're going to be doing is we're going to be moving our stop loss up above our entry within a matter of minutes or within the hour of us getting into the trade, because we got momentum on our side and it's pushing the price up. What we always want to be, our precaution is for that first couple of minutes or that first hour or so, when we get in and then price may be starting to pull back. We just want to make sure that we buying with momentum, and if we're buying with momentum, then we should be okay. But if we're not buying with momentum, for whatever reason, if we're getting faked out, or if there's just a news piece of news information that comes out that turns price around, then we want to make sure that we're not adversely affected by that movement. All right, guys. Sorry about that. I had to take care of a little personal stuff, but so let's go ahead and finish up here. So for this right here, once again, right now it's a hold, but we're gonna wait till it cross over to that downward trend line, and then we're gonna position that as a buy. And what we'll do is we will just wait back until it does, and then remember that once it does, we want to go ahead and put that risk-free trade on for this particular pair. Let's see. Look at the Great Britain pound, Aussie dollar. Here goes another one. It's kind of a crazy one too. But it bounced off of the support resistant lines here. Looking for it to cross over this resistance line. So what I'm seeing here looks like there's some momentum, however weak, but there's some momentum in the Great Britain pound pairs, like they're kind of bottoming out here. And so now we're starting to get a push up. And like it may be a drawn out push up, but still, nonetheless, buyers are starting to come back into this thing. So that's got to be, I got to account for something, right? I guess it's kind of what we're seeing here, then maybe. I don't know. That's crazy. Yeah, you're starting to kind of get a sense when you look at this right. You're starting to get kind of a sense that the bottom is kind of kicked in, and that this thing's starting to maybe kind of make a push up now. But it's kind of a weak push. Not a, it's not that strong, sharp push up. But the good thing about it is that as it starts to push up, then more buyers come in, and then as more buyers come in, it pushes even higher and pushes even stronger. So this could be, like I said, this could be the beginning of a bottom for this particular pair. Get back over here. So if you're long on this, or if if you're a Great Britain pound believer, then this right here is some potentially good opportunity for you. It does coincide with what the long-term trend for this particular trade is. It's just that right now on the short-term side, we've been seeing this initial pullback, right, after some pretty strong moves over the last couple of weeks, back in December. But if we're looking at this right here, price like it's came down, it's tested that support zone for this particular pair, which is still in line with the fibs, and it's still right here, actually with the red color zone, right? So we're looking for what our red D extension, right? Price is still in the downward trend line, but it looks like price is consolidating here, and it's either going to make its way up, or it's going to push back down. But because we're consolidating right here on a level of support, the belief would be that this is, price is getting ready to make this U-turn and get ready to make this push up. So we'll see. Not quite a buy just yet, but definitely something we want to watch over the next 24, 48 and see what happens. And if it moves the way we believe it's going to move, then definitely want to look at purchasing on this particular pair. Okay. Then this right here is the Great Britain Pound US Dollar. We had it right here with some downward momentum, just because price had broke below the A previously on this one. And so we started looking at fibs from the opposite angle. And as we saw, it had made 1, 2, 3. And it was in the fourth position to go down, fourth Fibonacci, I'm sorry, pattern, and it looks like it was going down. So we just went in and put the fibs on it just to look at it and see. As you can see right now, it's having a pretty steep pullback, right? Which could indicate that this right here is actually going to break above this A, and then that would be a buy. Which it would make sense when we start looking at how these other pairs are starting to bottom it out. And then this could mean that this right here is also bottoming out as well. And it is in this process of going to be pushing up soon. Let's just clear the screen for a second. I want to look at it on the daily. Remember, what we want to do is always look at it on the big chart first, and then come back and look at it on a smaller chart. Essentially, what we're doing is we're looking at the what's the overall momentum of the pair. So you can see right here it's been down for several months. In this scenario here, this is like a 2-year period. Price went up for a little bit and then started to come back down again. And now, we have some push up. This is back in late or mid-December, right? And then we have a bit of a pullback. But right now, for all intents and purposes, I think price is pretty much, we could say, is bottomed out, right? It's close to a bottom, and we're looking for a push, potentially up or down, and this is on a daily chart here. So, and it's really going to come down to what's happening here. This is the low. This right here is a spike down, right? Let's see here. Now the question becomes: will price come back and retest the backside of this downward trend line, or will price just continue to push up from here? And that is it's really a good question. Let's see if I put on a fib from here. So I think we got some room to push up on this one. This right here is definitely going to be a test. So essentially, when here's just a food for thought, right? Essentially, when you come up against something like this right here, the best thing to do is do nothing at all. And what I mean by that is don't trade it, right? Um, because if it's not easy to see the trend, if it's not easy to figure out where you at in the with the Fibonacci pattern, then it's not worth you trading because all that means is that this thing is a little bit more complicated, needs more time to develop, or maybe even you're trading off of the wrong time frame, right? Because if I'm trading off of a 1 hour and I can't really get my bearings on that, then maybe what I need to be doing is looking at a 2 hour, right? Or maybe even a 4 hour. Who knows? But the point is though that if we can't get our bearings and if we can't get what we need, then we need to be looking at something else because what you don't want to do is you don't want to get in here and trade on the wrong time frame or trade in the wrong direction, um, all because you're trying to force a trade because you're just trying because I just feel like I just gotta be in a trade. You don't have to be in a trade. What you have to do is wait for the trade to come to you, and then once the trade comes to you, then go in there and make your money. Let's see. Let's see. Let's see. Yeah, so a couple things. One, um, it hasn't broken over this downward trend line yet, so not looking to trade anything until that happens. Two, okay. So a couple things. One, it hasn't broken down. It hasn't broken over this downward trend line yet, right? So not looking to trade anything until that happens. And two, it hasn't formed its next fib move, right? And so what I mean by that is once it breaks over this downward trend line here, right, then you're gonna find your A and your B is gonna be somewhere up above that trend line, and then you're gonna look for your C, and then your D extension. So for this particular pair right here, for right now, the U.S. dollar, on Great Britain pound U.S. dollar, I would be out of it because I just don't see it there just yet. I think it has some more developing to do before it gets to where it needs to go. So this one right here definitely sit on the sideline. Not anything you want to be in just as of yet. Okay. Let's look at some other pairs real quick. Let's look at our odd pairs out. Here's the Aussie US dollar. This one down. Alright, so this right here is on the hourly chart. You see you got the downward trend going. Got a bit of a pullback right now at the moment. Here goes the D extension. This D extension right here is really at a, if you look back at it, it is at a extreme low here. Right? Last time it hit this low was back in October of 2018. So I'm not saying that it won't hit this low, but it's definitely one of those lows that it may be difficult for it to reach unless there's a lot of momentum in the market. Right now, it's pulled back up to this. Let's say probably 2.36 extension. Um, what we're looking for here is to see a drop in price. It could be a little bit, right? Going below that downward trend line. But with this right here, just like with any other pair, especially with this pair here, risk-free trade. You know, as soon as you get to profitability, I don't care if it's $2, $3, $4, whatever in profitability, um, lock that in to make sure that if that thing pushes back the opposite direction, that you're gonna at least leave out with something. Initially, that's what we did when we was on this trade here. And as you can see, this right here was the trend line. We waited for price to break the trend line. Once price broke the trend line, we put on a risk-free trade. We had a little bit of momentum. Put on some risk-free trade. Um, Price went down, popped back up, and when it did, we got out. But we got out with some money. If we would not have done that, we would have taken a loss in this particular trade because clearly our stop loss is back up here somewhere, um, and we would have took a loss in that one. But we didn't. We was able to take a trade and make money off it. Once again, we trade with momentum here. We want to trade on the right side of momentum, and if momentum is with us, then us locking in our profits is not gonna be a negative. It's actually gonna be a positive because price is gonna continue to move. It's not. We don't have to worry about it retracing and coming back and hitting that. But if we're trading with low momentum or no momentum at all, it's just some awkward price movement in the market. Well, the price is gonna go back and hit our stop loss when it's above our entry, and but that's okay though because we're gonna get stopped out, but we make some money on our way out, right? We get a couple of dollars for our troubles, and if we do it enough times, then guess what? We better retire. No, I didn't say retire, but you do enough times, it's okay. That's good because you're building your account up. Essentially, what you're doing, if you look at it from a baseball analogy, is you're getting on base. And that's what you want to do. You want to get on base. You don't necessarily want to have to go out there and try to hit a home run every time, but you do at least want to try to get on base. And that's what you're doing is getting base hits. When we're taking on risk-free trades. Then we look at it here, the U.S. Canadian dollar. This one here is closely hitting that A, and it's possible that it probably will wind up hitting that A today. If you're in this trade, hard trade to be in. Looks like. But hang tight. This one here, definitely if you're in this trade, just kind of remember that your price target has definitely changed. You went from the red D extension to all the way to the green. So depending on where you're in on this one, your profit margins are way down on this one. Try to manage this trade as best as possible. And like I said before, if you are in this right here, or if you're thinking about getting into this right here, I wouldn't get into it right now if you're not already in it. But if you are in it, you know, unless we get a good momentum swing, it's not much to do. Of course, you know, going in to buy would come into place once we cross over this downward trend line here. But then you also got the support resistance that you're going to have to contend with as well. So just kind of be careful and be knowledgeable about that. Get into this particular trade. But like I said, right now, it looks like with some weak momentum, weak buying coming in, and then looks like it's quickly start turning into a sell-off. So just monitor this right here over the next couple of days. See how it goes. Hopefully you'll be able to make some money for yourself. If not, don't worry about it. There's plenty of other opportunities for you to get into not only this market, but some other markets as well. Anyway, guys, that's it for me for today. I'm getting ready to get out of here. Thanks for tuning in. And hopefully it's been helpful to you. I will see you guys in another 23 hours. Take care.